All right, so we have talked about saving costs using what so far this semester? What examples have we talked about cost savings in our restaurant? What areas? In the bar, so beverages, what else? What's the main way that we talk about saving costs and controlling cost using what? Starts with an F. Using food. Okay, absolutely. Using food and beverages is the primary way that we have talked about saving and controlling our costs. Okay. The beginning of the semester, I know it's a long time ago. Okay. We talked about this concept of prime cost. What does prime cost include? Food cost, beverage cost, and what's that? Labor. Good. Food, beverage, and labor. Okay. That's our prime cost because those are our three most controllable expenses. We can control, we've talked about the purchasing cycle. We can control how much food we purchase, how much food actually gets distributed. How we can control costs during the production process. Same thing with beverages. And now today we're going to talk about in chapter 9, we're going to talk about labor. All right. So with labor, I heard someone say wages. What is wages? Oops.
Paid per hour.
Okay, so this is our hourly pay. That's our wages. Then, of course, we have salaries. What is a salary?
Your
What's that?
Yearly pay,
fixed yearly pay.
your yearly,
Yes, when you get paid, it's a fixed amount that you're paying your managers, your yearly amount, right? Your salary is this, and then it's broken down by all your different pay periods. Okay? So salary and wages is the money that we're paying either our managers or our hourly associates. But other things that a lot of people don't think about being part of labor are benefits and taxes. What kind of benefits might we have?
Insurance.
Okay, we might have insurance. I'll tell you this, when I got this job teaching, it's my first job ever having insurance. Well, let's not take that back. I got insurance when I was teaching 5th grade. But as an adult, it's a great feeling to have a job that covers insurance. What else? PTO, paid time off. Okay, so you get a certain number of hours, the more you work, or a certain number of hours for a time period, right? So for me, I get 2 days, 16 hours of paid time off. That I can personal time that I can just say, this is what I need to take some personal time and it's my time, right? After those 16 hours are done, I have no more paid time off. Okay. Anything else besides that? Okay, we might have 401k, which is our retirement. Absolutely. Okay, so a lot of this is extra things that the business is paying into on top of that. On top of what you're paying, they're paying you your hourly rate. Okay. What about taxes? Okay, we pay taxes, right, on your paycheck. Okay. Um, Thankfully, Texas does not have a state income tax. So we pay a federal income tax. We don't pay a state income tax. When I worked in Maine in the summertime, Maine has a state income tax. So they take out even more taxes based on what the state says. But so the taxes, depending on where you live, the federal taxes, we have On our paychecks, right? We have Social Security, we have the FICO or FICA taxes, okay? That is what you see on your pay stub is only half the amount. The business pays the other half. So if you look at your pay stub and your FICA says that you paid $150 in FICA taxes, your company also paid $150 for a total of $300. Okay. The other thing that is another tax is unemployment. Unemployment taxes. Unemployment tax is basically just like an insurance policy. So if somebody is fired and they collect unemployment, they pull from all those unemployment taxes that you've already paid into. Okay. So that's why labor is typically usually one of the largest expenses for a company. Okay. Even more so than food, the cost of the ingredients, the cost of the beverages, labor is usually one of the highest expenses for an organization. It's super easy for someone to say, we're going to raise the minimum wage to $15 an hour, or we're going to raise the minimum wage to $25 an hour. Super easy to say that. From a business perspective, if you double the minimum wage, what other areas of labor are going to be affected? Taxes are going to be affected. What else? Okay, so salaries are fixed, so they may not, but you know what though? With salaries, there is, and I don't know the exact number, so forgive me, but with salaries, there is a minimum salary that you can be paid to be exempt from overtime. Meaning, if you make more than a certain amount, then you are exempt, you cannot get overtime. And so there's discussions about lowering that amount, or no, I think it's raising that amount. So that way, people who don't make as much can still qualify for overtime pay. So salaries can be affected in that regard. Okay. Wages definitely, but also benefits. If your 401k is 6% of your paycheck, then that's more of a responsibility on the employer to pay that 6%. 6% of $15 is more than 6% of minimum wage. Does that make sense? Okay. So it's really easy. But what happens then if arbitrarily minimum wage is raised to $15 an hour? What else is going to have to happen to the products that company produces? They have to raise the prices. So that $5 burger is no longer $5. We have to take into account the cost of labor, but to raise our prices. So it's really hard just to say, yes, you've got to do this, right? From a business perspective, you got to figure out how to implement that. And sometimes the people who are making decisions aren't maybe the most business savvy people. Would it be wonderful if every single person got paid $15 an hour? Absolutely. Right? But you also have to figure out, is the volume there? Is the level of production gonna manage that? Or if by doing that, are you gonna cause people to go out of business? One of the things that I think about every time I go to Buc-ee's, right? They have that sign right out front. This is how much you can make if you're a cashier at Buc-ee's.
$18 and something cents.
$18 an hour starting, right? But why do you think Buc-ee's can put out a price for $18 an hour for, what's that?
They have you working a lot of hours.
Yeah, they actually have been working a lot of hours. Hold on, I want a second. I just want to make sure that I never reset my speaker. So I don't know if you guys have been talking. Oh. Garrett, I won't get you started on Buc-ee's. But with that, because they have such high volume, right? And I mean, anytime you go in there, it's busy. And so since they have such high volume, they can their budget can allow for that.
I've been there at like 2, 3 a.m. and
What's that?
I've been there at like 2, 3, 4 a.m. and they're still packed.
They're still packed. Yep,
It's never
absolutely.
You also have hundreds of locations, and each one of those locations is packed as well.
Yeah.
This location, all full of people.
And they're
Then you gotta
building a new
include the gas and all the food that's being taken out and
And also just the merchandise they have.
the merchandise.
Yeah, the merchandise, exactly. Absolutely. Those are great points.
They're also building a new one.
Oh, yeah.
They are over in Bernie area, yep.
It's only 50 Buc-ee's.
That's it.
Yeah, well, most of them are in Texas.
Well, they started in Texas, but yeah,
They are in Texas. There's one.
primarily in Texas, mostly in Texas. There's some outside of
There's a
Texas.
few in Florida. I know that.
Mhm.
6, I think, last I counted.
Yeah.
I think there's some
Sounds like
maybe
almost at
Alabama.
Austin.
Yeah, in New Braunfels, yep.
Austin, Dallas.
New Braunfels, Temple, and then there's one near Fort Worth.
A lot of
No, there's one going to Bernie, or there's gonna be.
A lot of the locations are northeast, because when you look at that and you go to a Buc-ee's, they have stamps of their locations and a lot of them are
Okay.
the northeast side.
Nice.
That's where the travel.
Yeah.
Or that's where the place go.
Yep.
Cities.
So you think about it from that perspective of volume of what we're selling, right? And like you said, all the other things, the retail, the gas, those are things that a standalone restaurant does not offering, right? So you don't have those supplemental incomes to allow you to be able to pay $18, $19 an hour. So the other thing too with let me see if I should go off on this soapbox or not. The other thing too is one of my favorite things to respond to people is when they talk about servers making $2.13 an hour. Okay, which is obviously less than what? It's less than minimum wage, right? What's minimum wage? $7.25? I think it's minimum wage is $7.25. Or $7.50 now? I don't know. But nobody works for less than minimum wage. Okay? So if I'm a server and I make $2.13 per hour, okay? And let's say I work 5 hours. That's $10.65. Okay? Who can tell me what $7.25 times 5 is, real quick? I'll have to do it in my calculator.
36.25.
36.25. Okay, and now subtract $10.65.
25.60.
Okay, so as long as that server makes at least $26 in tips during those 5 hours, they are going to be making a minimum wage. If they don't make $25.60 in that time of 5 hours, the employer is required to pay the difference. So let's say a server only made $20, and this is a true example. When I was working at TGI Fridays, this is where I learned this thing. This is where I learned this. I would have like 2 tables during lunch because it was so slow. We were a brand new restaurant. Okay, so slow. I'd have 2 tables. I'd walk out with lunch for $15 with $15 in my pocket. Okay, not really happy. And I was like, this is not, how can I live off of this? And my manager explained that if you walk out with this amount, the business has to pay the difference to make up to $7.25. Nobody's allowed to work for less than minimum wage. So next time you see that sob story about someone who leaves a 0 tip from a server, and they're like, how can I live on $2.13 an hour? You can just say, Mr. Uminski says that nobody works for $2.13 an hour. Okay? If you are not making the difference in tips, Okay, now, let me tell you, as a server, if I had, I don't know, in 5 hours, if I did $2,000 in sales, okay? If I did $2,000, let's cut it in half. Let's just do $1,000 in sales. If I did $1,000 in sales, and how do people usually tip? By percentage, right? What's the minimum percentage? 10% is the minimum to 10%, right? So what's 10% of 1,000? $100. If that person, that server does the bare minimum in 5 hours, and they make $100 for that shift, that's $20 per hour. Add that to your 213, now you're making $22.13 per hour. Now, if you're Mr. Uminsky, you average 20% because you're a really awesome server. Okay, so 20% is $200. Divide that by 5, and now I'm making $40 per hour, plus my $2.13. Okay, so whenever somebody is talking about, and so it actually helps the restaurant because the restaurant pays the taxes on the 213 an hour. So it actually helps the restaurant carry some of that burden of the cost when the guests tip versus the restaurant having to pay that full dollar amount. Does that make sense? Because the taxes on 213 an hour is a lot different than the taxes on 725 or $15 an hour. Lydia, you look really confused.
Not confused. I'm more thinking about the taxes for that because how are you counting the taxes towards the tip money that you make at the end of like your year when you're having to do
Yeah.
your taxes yourself?
That's a very good question.
It's coming out of all your tip money.
That's a very good question. That is why most of the time as a server, I had a void paycheck. Okay. So if I did $2.13, and let's say I worked a 40-hour work week, $2.13 times 40 is $85. Okay. Now, if I take my taxes, as a server, you have to claim your taxes. Sorry, you have to claim your tips after every shift, right? And so they're going to take your taxes based on your wages plus your tips. So let's say my taxes for that week were $100. Then I have a zero paycheck because they're going to take out that $85. I still owe them $15. So so that's how they calculate that. They take that into consideration. So a lot of times when I was a server, I had a void paycheck because my taxes were more than the wages that I worked. Does that make sense? All right. I spent way more time on that than I thought I was going to. But I think it was a good discussion. All right. So we also want to look at our productivity, right? So with our productivity and how well we are managing our costs, with food, we use our food cost percentage, right? So if the ingredients are a certain percentage of the selling price, then we know that we are managing our ingredient use. In labor, one of the ways that we can do that is our guests served per labor dollar. What does that word per represent? Division, right? So anytime you see that word per, it's divide. So labor, the guest served per labor dollar, we have the total covers served divided by our total labor dollars spent. So we served 2,500 guests. A cover is a guest. Okay. We served 2,500 guests. And I'd look at my payroll and it says that I have spent $18,000 on that. So when I do this, my answer is 0.139. Okay. 0.139. My goal was to serve 0.15. Did we achieve our goal? Yes or no? What do you think? Thumbs up for yes, thumbs down for no. Did we achieve our goal? The answer is no, we did not. Okay, 0.139 is lower than 0.15. We got close to it, but we didn't quite get there. Okay, if we wanted to serve our goal and meet our goal of 0.15, I would have had to spend $16,667. So you can see, how did I get that number? Good question. I took the 2,500 and I divided by my goal of 0.15. I don't know why I did that. Oops. And when I do that, I get the $16,667. So I spent more money serving the same number of guests. Does that make sense? Let's do another example. Our total cover served was 200 and we spent $950. So this is 0.210. So 0.21. Did we reach our goal of 0.25? No, we did not.
What's the formula?
The formula
Yeah.
is the guests served per labor dollars. The guests served divided by the labor dollars. Okay, so if we had made our budget 200 guests divided by 0.25, that's what we were going for. $800. So you can see I spent $150 more than what I wanted to. Does that make sense? If I have 200 guests and my goal is to do 0.25 guests per labor dollar, then that means I should have only spent $800. But in reality, I spent $950. Last one, 7,500 divided by 65,000. $11.15. Did we reach our goal? We did, bless you. We exceeded our goal. We exceeded our goal. If I were going to do this, 7,500 divided by 0.1 is $75,000. So since I only spent 65,000, I saved $10,000. Serving the same number of guests. Okay. But think about this. Remember how we talked about with food and if we wanted to lower the cost of food, what could we do to lower the cost of food? We might change the recipe, right? But what happens if we change our recipe and the guests don't like it anymore?
Stop buying it.
Right? They're going to stop buying it. So we don't want to change our recipe so far that it affects the quality. Same thing with service. We don't want to try to run on a skeleton crew for so long that we affect the quality of the level of service. Okay? What type of restaurant do you think is going to have the lowest or the highest guest per labor dollar? The highest number of guests served per labor dollar. What type of restaurant?
More high-end restaurants.
Like a chain, like an Italian.
A chain restaurant is going to fast food, right? Because they're just coming right up to the guest, to the counter, ordering their food, and they go away. Higher quality restaurants, fine dining restaurants, you're gonna have a server, you're gonna have a server assistant, you're gonna have a dining room manager. You have a lot more people serving the same number of people, right? And so fine dining restaurants, they're gonna have a little bit lower number of guests per labor dollar spent, right? All right, so we cannot control how many guests come into our restaurant. But how can we increase our labor productivity? So for example, let's go back to this example right here. We spent $950. We should have only spent 800. How can we increase our productivity and bring that price back down, that cost back down to 800?
Hire new people?
What's that?
Hire new people?
We might hire some new people, okay? What else?
Less waste. Less waste.
How do we decrease our waste as far as labor, right? We're talking only about labor right now.
More training.
Okay, so maybe we'll train more, train better. If we train more, we've got one person that's training and one person who's doing the training, doing one job. So if we have a server and a server trainer, then we got two people doing the same job, which means we have more people. We're paying more in labor dollars and we're serving the same number of guests. But if we can get it to where everybody is trained properly, then we can lower. So maybe during that time where we were spending $900, it's because we had a lot of trainees. And now this period, all of our trainees are trained. And now this period, we can focus on keeping it lower, closer to that 800 mark. Okay, what else?
Wait,
Okay, Daniel, have people do prep work when they're not doing anything. What's that phrase? If you have time to lean,
You have time to
you got time to clean. Okay, there's always side work to be doing, rolling silverware, refilling the server station. Most of mine's gonna be front of the house. That's where my experience is. But back of the house, if it's slow, what things can you do to prepare to shut down without fully shutting down? So that way, when it is time to shut down, you're a little bit of a head start, right? Okay, that's why at the end of the night, the managers are always like, come on, we gotta get done in 1 hour. Gotta get done. Okay, because we gotta get all that stuff done. What else?
lower other prices?
Okay, so we're not really talking more about like the sales right now. We're talking about just the expense line. So if we lowered prices, we might increase the number of people that come in, which then means we can increase the labor dollars. Okay, good. Increase or decrease the labor dollars depending on how many people are in the restaurant. So there's lots of things we can do to increase that productivity. Are you gonna say anything?
I'm gonna say kind of strict on people getting overtime.
Yeah, overtime is a big deal. That is definitely because that's going to increase that labor dollars that we spend, but the number of guests that we're serving is going to stay the same. Okay. All right, so, oh my gosh, we have 15 minutes to get to do this and chapter 10, which we can do. We totally can, promise. Okay. The tool that we're going to use in labor is our master schedule. Okay. The tool that we're going to use is our master schedule. If we look at this, server A comes in and they have 5 hours total. Okay. If we take the highest time, let's look at between 12 and 1 o'clock. Okay. If we have 80 guests at 12 o'clock, how many servers do we have?
4.
4. So what is our guest per server per hour? 80 divided by 4 is 20. Every server, their productivity is expected to be able to handle 20 guests per hour. Does that make sense? You see where I get that number from? they're expected to serve 20 guests per hour. Okay? At 10 o'clock, if we have less than 20 people, I'll need to bring in one server. Okay? For the rest of the time, we're almost or slightly over that 20, so we have everybody come in. And then finally, at 2 p.m., we're anticipating only 40 people, so 2 of our Rockstar servers can handle that. Okay, so doing this master schedule, if you didn't come to a class like this and you think, oh my gosh, I've got to bring in all of my servers from 10 a.m. to 2 p.m., that's 3 plus 2, 5 hours times, let's call it $12 an hour. What's 5 times 12? That's $60 per day times 360 days out of the year. $21,600. You can save on your labor costs by doing a staggered entry. There's no reason for 4 people to be in there at 10 o'clock. One person can handle that. Okay? And if you get busier than that, who jumps in? The manager jumps in. Okay? All right. Employee turnover rate. Essentially, what you need to know for this is whenever we have employees that leave, we have to hire again, and there's costs involved with that. Okay? So the total number of employees that were hired during the period divided by the number of employees that it takes to run the restaurant. Okay? So if we hired 115 people during a time period, let's say a year, okay? And during that year, it only takes 75 people to run our restaurant, meaning every position is fully staffed. We have all the servers we need, we have all the cooks we need, we're fully staffed. 75. What is 115 divided by 75? Okay, so we make that into a percentage. 153.3%. Okay? 153.3%. That's my turnover rate. Now, if I want to decrease my percentage rate, so 153 minus 93, what is that? What is 153 minus 93? 60%. Okay? So if I want to decrease by 60%, I have my decimal of 60.6 times my 75 employees it takes me to run my restaurant times $250 per employee. If I were to reduce my percentage, my turnover by 60%, I would save $11,250. Okay? People always say, and you'll hear this a lot in business classes, people often say people quit people, they don't quit jobs. What does that mean?
You've had a disagreement with your coworkers.
Okay, so a disagreement with coworkers or a manager, right? People quit people more often than they quit their job. Okay? So you all as managers, as future managers, okay, don't be the reason that somebody quits their job. I personally would love to spend this $11,000 on my employees. That's almost $12,000, right? So once a month, I might say, hey, I've got $1,000 a month. I may say, hey, you know what? We're going to do a drawing for 5 $200 gift cards. And this is the criteria to get your name in the drawing throughout the whole month. You know, hey, servers, sell me 5 appetizers. Cooks, make less than 2 mistakes on a shift. You know, so things that we can do to increase our productivity, increase our coworkers working together, and then I'd rather spend that $11,000 on them. I'm going to spend it anyways if I'm going to be doing that turnover. I'd rather spend it on them, right? Or say, hey, you know what? For $11,000, we're gonna shut down for one day at Christmas time, and we're all gonna go to Andretti's. And you guys can do your go-kart, you can do your art, you can do your arcade. I'll pay for all the food. You can bring your families. I'd rather do that than spend that $11,000 on training new people. Right? And so explaining to your staff, this is why we're doing the way that we're doing it. Okay. Woo! That was chapter 9. What's that?
Can you tell that to my manager?
All right. Chapter 10 in
Yeah.
8 minutes. Okay. Chapter 10 in 8 minutes. We can do it, guys. I promise. Because a lot of the stuff is repetitive. I'm just gonna put this all on the same video, chapters 9 and 10. Okay. So chapter 10, we're talking about protecting our revenue, our money. Okay. And so protect our revenue system. We have a 4-step system to protect our revenue. The first thing we want to do is we want to verify the product that is leaving our kitchen. Okay. We want to verify that product that's leaving our kitchen, whether it's through the guest checks, however we're going to do that. So if we look on the first top of our page, right? We have 50 filet mignons issued. We returned 5 to our inventory. Remember that quantity returned means we put it back in inventory to use tomorrow. It's not returned like the guest didn't like it, okay? So that means I prepared 45. That's my physical inventory. I can physically count that I served 45 filet mignons, okay? The next thing we do is we verify the charges based on the reports. So if we look, if I served 45, it says I served 45, and my reports are 44, I'm going to take my 44 minus the 45 that were served, that were issued out into the dining room. What's 44 minus 45?
-1.
-1. I'm short. I'm short a filet mignon. 22 and 22 match. What is 32 minus 34? -2. I'm missing 2 New York strips. Okay. And 11 match. That means we're good. Okay. So we're looking at these 2 items. Which 2 items have a negative variance?
Mhm.
The steaks, the filet mignon and the New York strip. Okay. Think back to chapter 8. We talked about the waste report. Let's go look at the waste report. Did somebody note they dropped one on the floor? Did somebody note that a steak was returned because it was over or undercooked? Okay. So you remember, as a manager, you have to become an investigator and figure out why those steaks are missing. Okay. The next thing we want to look at as far as charging our guests is we don't want to overcharge or undercharge our guests. What is an issue about overcharging a guest? If we overcharge somebody, what's an issue with that? They may not want to come back. Okay, good.
It's stealing.
Say that again.
It's stealing.
It is steal. It could be stealing. Absolutely.
They can also technically leave a review or tell multiple people and then.
There you go.
It's everywhere else. So they
Now
can
it's not
charge.
just them not coming back, but they leave a review. It could impact other people's choice to come stay at or to come dine at your restaurant. What about undercharging a guest?
Depends on
You
the
lose
person you
money.
get. You
We're
lose
losing money, first of all, right? Because our recipes and our menus, our items are priced at a certain point because of what it costs us to make it. So we're losing money, right? Because sales is that top line of our P&L. So we're losing money. But what happens the next time when they come in, they order the exact same thing,
They're gonna get.
and somebody gets charged them the correct way? They're gonna think, oh my gosh, you just overcharged me. Because I came in 2 weeks ago, I ordered this exact same thing, and it was $20. And now you're telling me it's $22. Okay? So it's gonna cause some confusion and some upset guests. Either way, undercharging or overcharging. Okay? We also want to look at the payments that people make. So flip your page over. once we settle all of our credit card payments, it goes into an account called accounts receivable. Accounts receivable. That means that's money that's going to be coming into us. If you've ever taken an accounting class, that's money that's due back to us. If we have to pay money, that's the accounts payable. Okay, those are our bills. We also have to keep track of other forms of payments like coupons. If we have a deal going on that says, buy one burger, get one free, when that server or that cashier turns in their shift report, they have to include all of those coupons as well. Because if they don't, then it's like we gave away that burger for free, which in theory we did, but this is a coupon that basically covers that cost of that free burger. Okay, it basically is showing that this is what it's for. If we don't have that coupon, then on the printer it just looks like we gave away product. Okay. And then the last one is verifying deposits. Okay. Verifying deposits, figuring out how much we are actually going to pay. So if we look at the notes page, we have a server who has a total sales of $1,500. And of those sales, $1,220 were credit card sales. So what is their cash deposit? How do we figure that out?
That's it. Subtract it.
Subtract, right? My sales say I sold $1,500 worth of product. Of that, $1,220 was credit cards. So then $280 is cash. That's what, as a server, I would put $280 cash with all of my receipts. Okay. Now, let's look at the next one right below. I know it's a lot of empty spaces, but that's okay because I've already given you one of the answers. If you add up, we're not going to multiply straight across. If you were to add up, all of our cash is equal to $2,604.30. So you'll see it on the page right here, kind of halfway down, $2,604.30. That's how much cash and change that we have in our drawer. We have a cash bank of $300. What do we do with that $300?
Keep it.
We got to keep it, so we got to pull that out. So we have to subtract $300, $2,304.30. That's how much cash I'm supposed to have on hand to deposit. Okay, we're good so far? Now, if our total sales were $5,830.35, and my credit cards were 3,500. $26.05, and I subtract those, what is my answer? And check that out, my answers match. That means my deposit is correct. So I make that as my deposit. I deposit $2,304.30 in cash because of my sales of 5,800, 3,500 was credit cards. Okay. Let me check real quick. The last thing I want to say, I know I'm already 1 minute over, but last thing I want to say is petty cash. Who does not know what petty cash means? Okay, so petty cash is a small amount of cash, usually about $100 to $200. Okay, it's meant for emergencies. Like, oh my goodness, we are out of soy sauce. hey, Andrew, I need you to run to HEB and get me some soy sauce. Okay, so I'm gonna give Andrew $50. I don't know how much it's gonna cost. Let's give him $50. Hey, Andrew, here's $50. I want you to go to HEB, go and buy 3 containers of soy sauce. It'll get us through to the next delivery. Okay, that soy sauce is $5 each. So what is 5 times 3? $15. So what is my change? $35. I'll do the math for you. Okay, that's my change. So when Andrew comes back and sees me, he's gonna say, hey, David, here's $35 cash. And here is a $15 receipt. This receipt is just like cash because it represents the difference of that $50. Okay. And then into the night, the manager is going to do whatever they do to replenish that petty cash back up to the amount. Okay. So petty cash is just meant to be there just for emergencies. Okay. It's not a whole lot of money. And usually the manager is the one who's in charge of that. All right, I went 2 minutes over. I apologize. We did chapter 10 in 10 minutes. I will post these video recordings. Remember, starting today's Wednesday, right?
Yes.
Okay, Monday was a holiday. Yeah, so starting Monday, we are gonna only meet, you can only meet for project, okay? So Monday for the rest of the month, we're gonna be meeting for projects. You still have to log in. I'm gonna do attendance and then I'm gonna look at the grade book. And if you have completed the assignments, the recipes that are due the following Monday, then you can log right off. If not, you need to stay in class or you need to stay online and ask questions about project questions you have, ingredients you have questions about, okay? And if you want to work on future recipes too, because you're all caught up, that's totally fine as well. Okay, the rest of the semester is gonna be spent on our project time, but you still have to log in on Zoom or come to class. That's still taking attendance, okay? If you don't log into Zoom, you'll get counted absent, and that's 10% of your grade. So please do that. Thank you so much. Also, let me know if you have questions about your schedules. I'll be happy to help you.
Can we look into Zoom video takes raw and then we can like log out? Or
If you are logged into Zoom, and I check the gradebook and you have all the recipes done for the next week that are due, and you have no homework to do, then you can log out. Otherwise, you need to stay logged in and ask questions.
Understood.
Thank you. Have a great day.